Hello everyone. Indian market have corrected 6-7% from its peak. So now the question in all our mind is whether this correction is an opportunity to invest or the correction will further deepen. Hence in this video, rather discussing like FII selling and moving money to China, let's do the proper analysis. Why are they selling and try to understand how now the market demand and supply is. So in order to understand, the first and foremost question is who owns what in the Indian market? If required, please pause and have a look. This is the very important pie chart. In the entire listed stocks in NSE, little below 41% owned by promoters and little above 11% owned by government. So this 52% owners of the company, mostly irrespective of the stock demand and supply, they won't sell their stocks. And then retail investors own 9.5%, mutual fund 9%, and Indian insurance 6%. So we can say either direct or indirect Indian people money 24%. Here also mostly they won't sell, but even they sell, then those money mostly they will reinvest back into the market like in some other stocks. Then in addition, based upon the SIP fund inflow, which is roughly 25,000 crore rupees every month, and the increasing popularity of the stock market among Indian public will probably increase this combined 24% money to further like 25 or 26% in the near term. And I have no idea who is this others 6%. Let's consider they also don't take the money out of the stock market that frequently. Hence, combining all, 82% of the money invested in the Indian stocks mostly will be keep on investing back into the market. But the remaining 18% is the problematic, which is owned by FII. Please note, 18% is not the small amount. As of yesterday, the total Indian listed stocks value in NSE was 443 lakh crore rupees. 18% of the 443 lakh crore rupees is roughly 80 lakh crore rupees. So that's the amount FII holding in the Indian market. Here please remember this number, 80 lakh crore rupees, or in billion dollars it comes roughly 950 billion US dollars. Hence in that 950 billion US dollars, last October month they only sold 10 billion US dollars, which is very fractional of their total holding. It means they can do the same selling spree for the next consecutive 95 months. So if you look in this way, it's really scary, isn't it? Now let's dissect the FII value further. I mean, already made a separate video 2 months ago about MSCI index rebalancing. Hence, don't want to bore with the same content. So from that video explanation, considering the other index like FII, we can say roughly 450 billion US dollars worth of FII money is in the Indian market through foreign index fund. So if we subtract that 450 billion US dollars from the total 950 billion US dollars, then the remaining is 500 billion US dollars. After that, foreign sovereign wealth fund like Saudi Arabia's royal family and pension fund like Canada pension fund, all together as of March holding roughly 17.2 lakh crore rupees, and in dollar terms it's roughly 200 billion US dollars. Thus, which reduces the remaining value to 300 billion US dollars. Then there are studies like Indian investors round tripping into the Indian stocks through the FII route is roughly around 10 to 15% of the total FII holding. So that equates to 125 billion US dollars. Hence, considering and combining all comes 775 billion US dollars, and this 775 billion US dollars is always the long-term investment. So the remaining 175 billion US dollars is what making our market very volatile, which is roughly in Indian money around 15 lakh crore rupees. Then out of that 15 lakh crore rupees, last October month they already sold 1 lakh crore rupees. So even if like that momentary impulse, FII sold another 2 to 3 lakh crore rupees in the next 2 to 3 months means, then also Indian mutual fund and Indian insurance companies can able to manage those, as I said earlier, as they constantly getting the money through SIP. Hence, this FII selling during and between the quarters, I don't think that will make any issue in the Indian market. But what will influence the Indian market heavily is if India's percentage in the MSCI index dropped means, then that consequence will be heavier. See, as I explained in that MSCI index video, the more market goes up relative to other country market, then that will increase that particular country's weightage. I mean, at the August review based on July end, China's weightage in the MSCI Global Index was dropped to 24.2 and India's weightage was increased to 19.8. Since at that time year to date Nifty increased 15% whereas China's Shanghai Composite Index dropped 3%. But after July end, now till date, Chinese Shanghai Composite increased 15%. At the same time, Nifty dropped 2.5%. And the next MSCI Index review is coming November 6th. Here, I'm guessing those 1 lakh crore rupees FII sold was on the bet that in the coming MSCI Index review, unlike the last 2 years, China expects to increase their weightage relative to India. Hence, coming November 6th, if the weightage change is not that significant, then that might stop FII from selling. If it is significant, in the worst case, as a butterfly effect, in the next 6 to 9 months, that might open the floodgate, which will make more FII to sell and also will make the foreign index fund money to go out of the Indian market. So please note it in the diary. November 6th is an important day. Then comes the next question, why Chinese market was negative before August and how suddenly it became positive. Let me answer that as well. If required, please pause and have a look. Between 2020 and to the present calendar year, Chinese index earnings haven't grown at all. In comparison, in the last 4 years, Nifty 50's earnings had the CAGR of 22%. So basically, China haven't grown. In comparison, India's earnings grown like crazy. Hence only after 2020, China MSCI index weightage dropped from above 35% to below 24%, whereas at the same time, India's MSCI index weightage increased from below 10% to near 20%, which all good. Now, why the table is turning? Because in the last 2 months, Chinese government announced near $800 billion worth of stimulus package. Hence, in the next 2 years, because of the stimulus package, it expects Chinese market earnings to grow over 11 to 12% annually. At the same time, Indian market from 22% annual growth, its earnings growth expect to drop just 13 to 14%. Hope I'm not confusing. Because of this earnings fundamentals, expecting the turnaround of China and the slowdown of Indian company earnings all playing its part. Now that leaves us the question, why Indian companies earnings slowing down? I mean, if you see the last earnings increase between April 2023 to October 2023, in that 6 months, the earnings increased 10%, but at the same time, between April 2024 to October 2024, earnings increased only 2%. So Indian companies are not doing good like last year. There are 2 reasons for that. One, there is no growth in the consumption side, no buying power of people increased, and I have no idea how Indian government going to increase further. Maybe more jobs, don't know and don't want to comment that. Then the second reason, read this article in the Economic Times. I will provide the link in the description and the pin comment. In the last month, Indian government spent very less money. I mean, originally this fiscal year on the capital expenditure side, Indian government planned to spend 11.11 lakh crore rupees like buying defense product or paving more roads, etc. That 11.11 lakh crore rupees on the monthly basis comes approximately 92,500 crore rupees every month. But between April to August, Indian government spent only 60,000 crore rupees every month in the space of planned 92,500 crore rupees, which equates Indian government spent 35% less money than they intend to spend. In fact, if required, please pause and have a look. The GST collection was fairly stable. However, Indian government was not spending. Are they going to save those money in fixed deposit? No, I don't think so. And I think at the end of this fiscal year, they will spend more money. So if you ask me why they didn't spend so far, I think, and even in that Economic Times article, they mentioned the same reason. It's primarily because of election. So in the next 6 months, we can expect Indian government to do a crazy spending. In that way, I think the earnings of the Indian companies for this financial year 2025 expects to go up about 10%, but not like 22% it achieved in the past 3 financial years. So please keep check on the earnings. I personally think the present market is primarily driven by lack of earnings, which I expect to come back once government started to spend their money. And please don't think Nifty ran up so much in the last 3 years, so it won't go beyond the present level kind of. Anything can happen in the stock market. Always expect the unexpected. As far as I believe, earnings always drives the market. Regarding the valuation, I will make another video on the next week Saturday. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.